Hey everyone, welcome back to the channel. Getting ready for a prosperous 2024? I know I am. Today we're diving into the top 10 best investments to kickstart your year and potentially grow that money. We've scoured through various expert sources, including a detailed article from Bankrate, to bring you this list. Let's get right into it. Okay, let's be real. You knew real estate was going to be on this list, right? It's like that classic car in your grandpa's garage. It's been around forever, it's reliable, and it just seems to appreciate in value over time. But is that still true in 2024? Here's the deal, real estate is inherently tangible. You're investing in a physical asset, whether it's a rental property, a piece of land, or even your own home. And people always need a place to live, making it a consistently in-demand market. Now, I'm not saying it's a guaranteed ticket to riches. You've got to be smart about it. Location, property condition, market trends, these all play a crucial role. But historically, real estate has shown resilience against inflation and provided long-term growth potential. So, while real estate might seem like an old-school investment, it's still got a lot of potential in 2024 and beyond. Alright, moving on to another heavy hitter in the investment world, stocks. Now I know what you might be thinking. Stocks, isn't that just gambling? Well, not necessarily. Think of it more like becoming a part owner of a company you believe in. When you buy a stock, you're essentially buying a tiny piece of that company. And as that company grows and becomes more profitable, so does the value of your stock. It's like planting a seed and watching it grow into a mighty oak tree. Except instead of acorns, you're hoping for dividends and capital gains. Now I'll be honest, the stock market can be volatile. It's a bit of a roller coaster ride with its ups and downs. But over the long term, historically, the stock market has trended upwards. Just look at the S&P 500. It's delivered an average annual return of around 10% over the past century. That's why diversification is key. Don't put all your money into one stock. Consider investing in a diversified portfolio of stocks across different sectors and industries. Because when done right, investing in stocks can be a powerful tool for building wealth over time. Okay, let's talk about the elephant in the room. Cryptocurrency. It's been the wild west of the investment world, with stories of overnight millionaires and devastating crashes making headlines. So, is it the future of finance or just a speculative bubble waiting to burst? Here's the thing. Cryptocurrency is still in its early stages. It's a digital currency, secured by cryptography that operates independently of central banks. And that decentralized nature, along with its potential for secure and transparent transactions, has attracted a lot of attention. We've seen Bitcoin, the OG cryptocurrency, skyrocket in value and then plummet back down. But here's the reality. Cryptocurrency is highly volatile. Its value can fluctuate wildly based on market sentiment, regulatory news, and even Elon Musk's tweets. It's not for the faint of heart, and it's definitely not an investment for your entire life savings. However, if you're willing to stomach the volatility and understand the risks involved, cryptocurrency could offer potential rewards. Because in the world of cryptocurrency, anything is possible. The good, the bad, and the downright ugly. Alright, let's shift gears and talk about an investment that's not just about making money but also about making a positive impact on the world. Renewable energy. With climate change becoming an increasingly pressing issue, the demand for clean and sustainable energy sources is only going to grow. Think about it. Solar panels, wind turbines, hydroelectric power. These are the technologies of the future. And as the world transitions away from fossil fuels, investing in renewable energy companies and projects could be a smart move for both your portfolio and the planet. Governments around the world are implementing policies to support clean energy, and technological advancements are making it more efficient and affordable than ever before. Investing in renewable energy can take many forms. You could buy stocks in companies that manufacture solar panels or wind turbines. You could invest in clean energy ETFs that track the performance of multiple companies in the sector. Or you could even consider investing directly in renewable energy projects like community solar farms. It's an investment in a cleaner, more sustainable future. And who wouldn't want to be a part of that? Alright, let's venture off the beaten path and explore the world of emerging markets. These are countries that are experiencing rapid economic growth and industrialization, offering potentially lucrative opportunities for investors. Think of countries like India, China, Brazil. These are the powerhouses of the developing world. They have growing populations, increasing consumer spending, and a hunger for infrastructure development. And that translates into potential investment opportunities across various sectors. Now, investing in emerging markets is not without its risks. Political instability, currency fluctuations, and regulatory uncertainties can all impact your returns. But for those willing to embrace the volatility, emerging markets can offer diversification and potentially higher returns compared to developed markets. It's about finding the right balance between risk and reward. But for those with the patience and risk tolerance, emerging markets can be a rewarding addition to any diversified portfolio. All right, let's talk about an investment that's been a safe haven for centuries: gold. It's the shiny metal that has captivated civilizations for millennia, and it still holds its allure as a store of value and a hedge against economic uncertainty. When the stock market takes a tumble or inflation rears its ugly head, investors often turn to gold as a safe haven. It's a tangible asset, unlike stocks or bonds, and its value tends to rise when other assets are falling. Now, I'm not saying gold is going to make you rich overnight. It's not a high-growth investment like stocks or real estate, but it can provide stability and peace of mind during times of economic turbulence. Think of gold as an insurance policy for your portfolio. It's not there to generate massive returns, but rather to preserve your capital and protect you from major losses when other investments are struggling. Because when the going gets tough, a little bit of gold can go a long way in protecting your wealth. Okay, let's talk about an investment that's often overlooked but plays a crucial role in a well-diversified portfolio: bonds. Now, I know what you might be thinking. Bonds? Aren't those boring? Well, yeah, they might not be as exciting as stocks or cryptocurrency, but they offer something that those investments don't: stability and predictable income. Think of bonds like loans that you make to governments or corporations. When you buy a bond, you're essentially lending money to the issuer for a fixed period, and in return, they promise to pay you regular interest payments, known as coupons, and return your principal investment when the bond matures. Bonds are often seen as a lower-risk investment compared to stocks. They provide a steady stream of income, and their value tends to fluctuate less than stocks, making them a good option for conservative investors or those nearing retirement. Now, bonds do come with their own set of risks. Interest rate risk is a major one. When interest rates rise, the value of existing bonds tends to fall. But overall, bonds can provide a solid foundation for any diversified portfolio, so don't underestimate the power of bonds. All right, let's step into the high-stakes world of venture capital. This is where big dreams meet even bigger risks, and where investors with an appetite for both can potentially reap substantial rewards. Venture capital is all about investing in early-stage companies with high growth potential. Think startups on the cusp of disrupting industries, developing groundbreaking technologies, or creating entirely new markets. It's about backing the next Amazon, Google, or Facebook before they become household names. Now, venture capital is not for the faint of heart. It's a high-risk, high-reward game. The vast majority of startups fail, and only a select few achieve unicorn status, reaching $1 billion valuation. But for those that do succeed, the returns can be astronomical. If you're looking for an investment that's both exciting and potentially lucrative, and you're comfortable with the risks involved, venture capital might be worth exploring. It's an opportunity to be a part of something big, to support innovation, and to potentially share in the success of the next generation of game-changing companies. Alright, let's talk about an investment vehicle that's become increasingly popular in recent years, especially among millennial and Gen Z investors: ETFs, or exchange-traded funds. These bad boys are like the all-in-one solution for investors who want diversification, simplicity, and affordability, all rolled into one. Think of ETFs like baskets of investments, kind of like those variety packs of chips you get at the supermarket. Instead of individual stocks, bonds, or other assets, you get a whole bunch of them in one neat package. This means you can instantly diversify your portfolio across different sectors, industries, and even countries with just a single trade. ETFs are traded on stock exchanges just like individual stocks. This means you can buy and sell them throughout the trading day, and their prices fluctuate in real time. They also tend to have lower expense ratios compared to mutual funds, making them a more cost-effective option for many investors. ETFs have revolutionized the way people invest, making it easier and more affordable than ever to build a diversified portfolio. So, if you're feeling overwhelmed by the sheer number of investment options out there, or you're just looking for a hassle-free way to invest your money, ETFs might be the perfect solution for you. Alright, let's wrap things up with an investment that's a little more unconventional but can be incredibly rewarding both financially and emotionally: art and collectibles. Now, I'm not just talking about your grandma's antique china collection or that dusty baseball card collection gathering dust in your attic. I'm talking about investing in pieces with historical significance, artistic merit, or cultural relevance. Think fine art, rare collectibles, vintage cars, even limited edition sneakers. These are assets that can appreciate in value over time, driven by factors like scarcity, provenance, and cultural trends. Now, investing in art and collectibles is not for everyone. It requires knowledge, passion, and a keen eye for value. It's not as simple as buying an index fund or a bond, but for those with a passion for art, history, or collecting, investing in these tangible assets can be both personally and financially rewarding. So, if you're looking for an investment that's more than just numbers on a screen, an investment that speaks to your passions and interests, art and collectibles might be worth exploring. It's a world where passion and profit can intersect, creating a truly rewarding investment experience. There you have it, folks. The top 10 investments to kickstart your 2024. Remember, this isn't about getting rich quick. It's about making informed decisions and growing your wealth over time. Don't forget to like, subscribe, and hit that notification bell so you don't miss any of our future investment tips. We're here to help you navigate the world of finance and make smart choices with your hard-earned money. Thanks for watching, and I'll see you in the next video.